I'm John Devine from Blockfills. I got a great panel for you today. A bunch of industry leaders and innovators are up here. I'm gonna let them introduce themselves. Ronnie, why don't we start with you down there?
Sure. Ronnie Verissimo. I'm with Isla Verde Capital. We're a fund based out of Puerto Rico. We are in the renewable energy credits, carbon offsets, and all of those sustainability markets. And we've been kind of introduced via our work with Blockfills and Chris here at Carbon.Credit to the Bitcoin mining and larger Web3 space, trying to offer some different solutions for sustainability.
I'm Chris Mack from Carbon.Credit, and Carbon.Credit is an exchange for carbon credits, renewable energy contracts, and some other assets around that, including the clean Bitcoin.
I'm Neil Van Hughes with Blockfills. We're a global financial technology company focused on the digital asset sector, as well as other nascent markets, looking to bring B2B customers and institutions into different trading markets.
Hi, I'm Elliot David, the head of climate strategy and partnerships at Sustainable Bitcoin Protocol. We're working with miners to help incentivize financially Bitcoin mining using clean energy sources. Today, working with about 10% of global hash rate, including miners like CleanSpark, Crusoe, some of the really awesome folks in the space. And also building a bridge to institutional investors and asset managers that want to hold Bitcoin in an auditably sustainable way. I think we're probably going to get into what that means on the panel. But yeah, that's me.
All right, thank you guys. So we're going to start this thing off with a question. I think I'll target Neil and Elliot for this one. So why is sustainable Bitcoin important for the broader Bitcoin, or I could say crypto industry?
Sure. So I think the idea of creating Bitcoin mining and sustainable mining activities is part of a bigger conversation. If today you were Visa or MasterCard and you were spending a lot of money on computing technology to run your payments network, nobody bats an eye, right? But the moment you bring a decentralized, compute load into the world, consuming a lot of energy, all of a sudden people have questions. So I'd like to think that the reason why it's important is, bringing, mining and sustainable mining into like a household conversation, such that we can progress that part of the industry as well as the larger digital asset industry.
Sure, yeah, agree with you, Neil. I think before we ask that question, maybe we even have to ask, why is sustainability important in the first place? Like, why are we asking this question at all about Bitcoin's energy consumption? Why is it even a debate, right? Don't know how many sort of climate-oriented folks are in the audience. We all care about clean air, clean water. But when it comes to climate change, we are rapidly approaching this kind of tipping point. Just as an example, we're all here in Miami. The last time there was this much carbon in the atmosphere, 80 to 90% of the state of Florida was underwater. So this isn't like some kind of far-fetched, crazy climate activist ranting. We're approaching a tipping point where we might not be able to come back. So it's important to decarbonize not just Bitcoin mining, but all aspects of the economy. What's unique about Bitcoin, though, is that it, in fact, has this potential to be an incredibly powerful energy transition technology. And if we can change the narrative, the sort of dirty narrative around Bitcoin mining, then we'll be able to truly leverage this technology to actually accelerate decarbonization. And instead of regulators and climate folks coming out and saying Bitcoin's going to boil the oceans, in fact, let's say 5 years from now, we want them to be able to come out and say, thank God we have Bitcoin. It's enabling the energy transition, right? It's making it possible. So I think that's why this conversation is important.
That's helpful for us all. I'm going to stick with you two here on the next one. So what are the negative externalities associated with Bitcoin mining? That's the first part of the question. And secondly, what's the current public perception of the industry from a sustainability perspective?
Yeah, sure. I think first and foremost, at the top, you've got this idea of like it's not necessary. why does Bitcoin need to exist? Why is it there? It's not necessary, and so it's unnecessarily consuming energy, and it's because it seems or appears to the public or pressed on the public narrative that it's unnecessary. There's a lot of thoughts around, well, if it's in these dark, shadowy places where people are hiding to mine Bitcoin, they must be doing it with dirty energy, right? I think we still need to do a lot of work on the facts of what are the vast majority of Bitcoin mining participants using as an energy source. How are they setting up? Where are they setting up? What are they consuming? And ultimately, I think if those facts were released in a little bit more fair fashion, you'd find that most of these operations are more nimble than your traditional compute loads. They're in better locations and geographies that are actually solving other problems, and those problems happen to solve a Bitcoin miner's problem, which is typically large amounts of cheap energy, right? So I think what the negative externalities are simply that you're a large consumer of energy. It's because it's not a widely accepted industry, then this large consumer of energy must be consuming dirty energy, right? And so I think there's just a number of fallacies that need to be corrected over time. That comes with advocacy. That comes with lobbying, which is happening in a number of states. There's people trying to get out the real information. And then I think, the rest of these gentlemen, on the panel here, they're focused on, how do we build in, more transparency, more information on what type of energy is being utilized. And even if they are utilizing something that's not quote unquote renewable, how do we offset that carbon footprint? And so, all those things together can I think, progress the current state of negative externalities.
Yeah, and I'll try to give a quick answer because I know we want to get to the other guys on the panel. If I had to summarize sort of that first point that Neil just made, is that if you don't think there's any value or utility in Bitcoin, then a single kilowatt hour, doesn't matter if it's green or non-green, is a waste, right? So whenever we think about sustainability, it's always in the context of what? You might think that gas is very dirty, but compared to coal, it's really clean, and then compared to solar, it's really not, right? So sustainability is always a matter of opportunity cost. It's always a matter of comparison. And I don't think we do enough in explaining to people what is the value of Bitcoin in the first place, right? Because if we could jump straight into the energy debate, straight into the sustainability debate, then we're jumping the gun. Because again, if you're talking to somebody who doesn't think that Bitcoin has any value, right? Maybe they're in the US where most of us are banked, although about 1 in 4, 1 in 5 Americans are underbanked. So that's maybe sort of a separate topic. But yeah, unless you answer that question first, then there's no point in having the further debate. So just as an example, a lot of folks in the industry were in DC last week meeting with senators, congressmen, lawmakers, regulators. And the big question is why should we care? Why should we care to regulate or provide guardrails to an industry that we don't see has any use? If you explain to them that 1 in 4, a quarter of their constituents are underbanked, they don't have access to financial services, their ears perk up. They start to care. That said, everything has an externality. So Bitcoin mining, I know we like to talk a lot about how sustainable it is, how it's only getting more sustainable, it's efficient, all those things can all be true, but the reality is there still are negative externalities, whether it be noise pollution in some places, it could be water pollution, energy consumption, right? As little as Bitcoin mining sort of consumes energy in the context of global energy consumption, it's any miner here, it's their number one cost, their number one sort of business expense. We're using a lot of energy, guys, so we do have to kind of answer this question, and we're only going to use more. So maybe I'll pause there and.
Yeah, no, that's a great perspective there on it. and I think it encapsulates the entire conversation quite well. So we're talking about negative externalities associated with Bitcoin mining. How do we attack those negative externalities? I think we're focusing on electricity consumption and offsetting carbon. So with that, Ronnie, I want to go to you. Renewable energy credits and carbon offsets. These two topics get kind of blended together sometimes. Can you define for us the difference between a renewable energy credit and a carbon offset, and what makes sense for Bitcoin miners or holders of Bitcoin that want to alleviate these negative externalities?
Yeah, so I think this question kind of, you have to back up a little bit, right, and talk about how do you measure carbon emissions and how that's related to Bitcoin mining. So Bitcoin miners, for the most part, I mean, if you go into a deep dive, there's the way you look at carbon accounting. Typically, there's three scopes, three buckets that your emissions come from, right? Your scope 1 emissions, which are typically your direct emissions from your processes. Your scope 2, which is typically just your purchased power from a grid, and then scope 3, which is anything that's a first or third party provider to your business. So in the case of Bitcoin mining, it's really all going to fall under scope 2, and starting there, typically the right tool for dealing with a scope 2 emission or your scope 2 emissions are renewable energy credits. If you're in the U.S., that might be IREX. If you're outside of the U.S., or GOs, guarantees of origin, they're all very similar. They're the rights to the renewable aspect of the power that was created at a wind farm, solar farm, hydro facility, whatever it is, that trades separately as a commodity to the power itself. A carbon offset is just the rights to carbon emissions that have been abated or removed. So maybe you took an industrial process, you made it a little bit cleaner. You can sell those rights instead of keeping them for yourself, or plant trees, create a direct air capture system, or whatever it is. Those carbon removals, you can also sell them instead of keeping them for yourself. So the two products are both tools in the same toolkit, but they have a different purpose. And I think this is one of the things that we've been kind of trying to talk to guys about, people in the industry, is really understanding which tools do you need. For the most part, it's REX if you're a miner that's on the grid, and that's what you should be using. Did anyone want to add anything?
I apologize for monopolizing. Just to add to that, these are all voluntary mechanisms. So if you want to mine using whatever energy you want, nobody's going to come in and say, you can't do this, right? Even in New York, where I'm from, and they have a moratorium on mining, they didn't come in and say, like, you can't do this. They looked at a certain plant, they claimed that, they weren't within certain air regulations and shut it down, right? Like, nobody's going to come after you and say, you have to buy this or that. That said, and I think this is what we're talking about here, if we're all making these kinds of green claims, right? If you're saying, I am a renewable energy miner, I'm a green miner, I'm holding Bitcoin in a clean way, whatever the case may be, or if you're not Bitcoin, right? Like, so you're a data center, a factory, whatever the case may be. What these instruments let you do in different ways is make a claim to an environmental benefit. So again, this is all voluntary. I know we're going to talk a lot about kind of top-down accounting and all that, but there's no boogeyman out there that's going to say, like, you have to buy this. All right. I think that's also
that's helpful, Elliot. All right, I think the next one would probably be for everybody here on the panel. So now we're all listening to this. We all understand the negative externalities with Bitcoin mining or energy consumption, energy-intensive industries in general. Now, if we want to go after those negative externalities, how can we buy renewable energy credits today? If I'm a Bitcoin miner or if I hold Bitcoin and I want to own these REX, what can I do? How can I purchase these things? Maybe Ronnie, you kick us off, or
Yeah, I mean, these are OTC commodities ultimately, right? So you find someone who can supply you with them. We've been working with Chris and Blockfills. Like, I am sure that Elliot has some venues as well. All of us have access to these products. So you contact us. We have REX and offsets. But the first thing you really want to do, and I can't stress this enough, is take a step back and educate yourself on what it is you need and what it is you want to use, so that when you come have a conversation with any of us, you're a little bit informed, you understand what you're asking for, what sort of things you're looking at. But broadly speaking, these aren't highly transparent yet because Carbon.credit hasn't launched long enough. But these markets, they're all over the place. You can find them if you know who to talk to.
Yeah, so that's really what our goal is at Carbon.Credit. So we're looking to build a much more liquid market. And yeah, to date, you're correct. It's been very OTC driven and very liquid. And so what we're doing is creating more liquid markets that actually show provenance back to where these carbon assets or renewable energy credits, where do they actually come from? How are they developed? What were the methodologies? All these things become important for market participants, and that's what we're showing at the same time, building a liquid order book, a liquid market for those assets.
While these guys have been talking and telling you guys about all the ways we can do this, I've been thinking about yelling "wake up," just in case anyone out there was sleeping, because I know we're not talking about what seems to be the world's most exciting topic, but I will tell you that this market is only going to get bigger, and it's going to get bigger at a very, very rapid pace, especially over the next several years. And so whether you want to pay attention to it now or you want to pay attention to it later and get yourself educated, the stuff that these guys are talking about is going to be in your face over the next couple of years. So, I think everything that you guys are saying about getting yourself educated before you start the conversation, following along what Chris is doing at Carbon.Credits to see where this market is headed, just pay attention because this stuff is not going away. And, as big and as fast as Bitcoin mining grew, this market might look a lot like that very shortly. Yeah. Do you want to add anything else?
Sure. Yeah, I guess really quick numbers on what Neil was just talking about. I believe the global rec market, the U.S. rec market is roughly 12 billion today, growing at about a 26% compound annual growth rate. It's expected to hit, I think, 100 billion by 2040 or something like that. So growing pretty quickly. And this might take us into the next topic, but these RECs, these different instruments and commodities, it also matters like how you're going about accounting for your emissions. So there's a lot of different conventions by which you would measure your environmental footprint. Some of y'all might have heard of, the Greenhouse Gas Protocol, Carbon Disclosure Project. There's going to be these SEC. There's a new SEC disclosure rule about emissions for publicly traded companies. I believe the decision on that is coming probably next year. So this is going to be something that any industry is going to have to pay attention to.
Yeah, so that's a good segue to almost wrap this thing up. But accounting. Do you want to give us a little, the audience, some high-level color on the different ways to do the accounting on this stuff, and kind of what your thoughts are on it?
Sure. And I don't know how many of y'all are Bitcoin miners. I'd actually be curious to raise a hand. Any of you guys are Bitcoin? Oh, okay. So a lot of you. A Twitter storm was swirling around a week or two ago. There's an imminent article coming out in the New York Times by an investigative journalist named Gabriel Dance. The crux of it is going to come out and say that the Bitcoin mining industry, we're all claiming to use varying degrees of renewable energy, but we're claiming to be a very green industry. And essentially the article is going to say that, in fact, these claims are incorrect. Now, he's not saying that these miners are lying, but he's going to be saying that the convention through which we're doing this kind of accounting is wrong, and under this convention that he chooses, the industry is probably like 5 or 10% renewable or something like that, right? So which, as you all know, is a pretty big disparity from what you're hearing from, say, the Bitcoin Mining Council. A lot of what we're talking about here when it comes to these, markets, whether it's carbon credits or RECs, a lot of that has to do with what's called market-based accounting, which, again, I highly recommend, as Neil said, sort of looking into this, seeing what makes sense for you. But under a market-based accounting paradigm, you have to essentially match your energy consumption with these attributes. So let's say, you buy 1,000 megawatt hours of power a month. You would have to buy 1,000 of these RECs. Say the prevailing price is $2. That's, you do the math. There are other approaches that have to do with taking local grid mixes, which aren't typically used. And then this new paradigm, not new, this paradigm that this particular journalist wants to apply to the industry is called marginal emissions accounting. I would probably take like 45 minutes just to explain the sort of nitty-gritty behind it. I highly recommend folks check it out, marginal emissions analysis. But essentially it says that by adding load to the grid, you are inducing new capacity coming on, essentially first order, and that capacity is almost always fossil energy, typically gas plants, because they're base load and flexible, which means that miners that are running 95 to 100% of the time are inducing a lot of emissions. So again, educate yourself on some of these different accounting paradigms. If we want to make these kinds of green claims, we're Bitcoiners, we believe in, don't trust, verify. As it turns out, we'll probably be using a lot of really clean energy. So anyway, I highly encourage folks to check out some of these paradigms.
Yeah, that's helpful, Elliot. There was a big announcement today. Chris Mack from Carbon.Credit really pushing this industry forward. We talked for 10 minutes about an hour ago on the ordinals he has launched. Chris, you want to just give us another shot at what you're doing with the Bitcoin ordinals and renewable energy credits and clean Bitcoin?
Absolutely. So Clean Bitcoin is a product it's really designed to solve all the things that we're talking about here. It is a Bitcoin ordinal, so it's on the Bitcoin network as an NFT, but essentially what it is it's a right representing the offset of the renewable energy used to mine Bitcoin. And it can be purchased after the fact, so you don't necessarily need to worry about the same accounting that we're talking about here, because you know that it's backed by the renewable energy credits.
All right, I got it. And, that's just, as I said, it's pretty special to be here today because that's a big deal. It's a big announcement for this whole industry, quite frankly. But, another innovator is the Bitcoin Sustainable Protocol. So do you want to give us some final color on kind of what you're doing before we offer the audience to ask a question or two?
Sure. And I guess really quickly for context, this conversation is not new. Even before Elon tweeted in 2020 and kind of sent the world into chaos, people have been thinking about this Bitcoin and energy question. At SBP, we've been working with folks like Jihan Wu, in the early days, thinking about how not only can we address this, this narrative change around Bitcoin, but how do we also financially reward and incentivize miners that are using clean energy sources? And we've sort of done just that, not to shill or pitch, but we've developed an instrument that can be issued to miners that are using clean energy sources. They can then sell this on to institutional investors and asset managers. It functions very similarly to some of these environmental commodities that you guys have sort of been talking about. We've been around for a couple years now. We're working with some pretty awesome miners in the space. At present, about 10% of global hash rate. Plus, we had a pretty big announcement on Friday that we now have a partnership with BitGo. So, for those of you who don't know, pretty big, custody, security, digital assets provider. They're going to be custodying our asset to all of their institutional clients for free. And then on top of that, developing a proof of sustainability API that will enable, BlackRock, Goldman, Fidelity, all these folks that, we're working with or that we want to work with. Basically, they can not just trust that they are holding Bitcoin in a sustainable way, but actually prove it, right? A lot of this talk of proof of reserves, transparency, that's something we should all care about, and it'll only make the case for Bitcoin stronger.
Yeah, that's great. So, with that said, we got some real industry pioneers up here. I'd like to give an opportunity to the audience to ask a question or two if they would like, if there are any questions. All right, no questions. So, to wrap this, let's just finalize one more time around, guys. Ronnie, you want to give us some final thoughts on what we're doing, and we'll go down the line and we'll wrap this up?
Yeah, man, to reiterate what we've already said, really, this is about understanding what your environmental externalities are, what your risks are, educate yourself, and be proactive. I think when I look back on 15 years of being in renewable fuels, renewable energy, the groups that have been proactive and taken a hold of the narrative as fast as they can have done the best with it, and they've been able to actually work things into their favor so that they aren't just reacting. to everyone else. And I think Bitcoin really has an opportunity. Bitcoin miners and the Web3 space have an opportunity to do that, and it's full of innovators like the people that are sitting up here who are ready to work with you guys to do so. So, continue to have conversations, and I hope, I get a chance to speak to you guys and answer anything that you might want to know from me.
So I was at a conference in Houston recently, and it was very driven by oil and gas. You would think oil and gas, Bitcoin mining, how does that come into play? Well, what was a key takeaway was that even the oil and gas doing flare gas or Bitcoin miners, if they're already using renewables, you can actually make money by selling these products. So it kind of gets very interesting when you realize, okay, instead of buying, now you could be a seller. And so you can monetize what you've already been doing. So definitely check out carbon.credit. And it's a full exchange. You can list your assets for sale, trade them, or buy, either buy or sell. So.
Yeah, thanks, Chris. Yeah, guys, just please keep in touch about this, right? John and I available via Blockfills to talk about price discovery, trading over the counter or electronically on digital asset products, products especially built for miners, like structured products, hedging, treasury management, etc. Now carbon offsets and REX, right? We're already partnered with Ronnie and Isla Verde Capital, and we are really excited to try to do anything we can with Chris and everything, support everything he's doing. And we're actively speaking with Elliot constantly about the evolution of his work. So please keep in touch. We'll be out there pushing this narrative because we fully believe that this market is only getting bigger. And if there's anything we can do to help you out, let us know.
First of all, thank you to the Bitcoin Energy Summit folks for putting this together. I know this is the first year, but so it's pretty exciting. Please just stay in touch, follow up on our work. Happy to support all the great miners in the space. Also, it's really exciting to see others. We could say, oh, we're the only one doing this, but we're not, right? The reality is that there's a lot of really cool and exciting solutions that are building up in the space, not just the ones that are here on this stage. So highly recommend, do your own research, figure out what makes the most sense for you. And actually, a really important word that RJ said was risk, right? If whether or not you care about, making these green claims, making them credible, that's honestly less of the issue if you're a business. You want to improve your bottom line. So when we talk to miners at SBP, it's not a question of, oh, hey, you should care about this. Nobody cares about anything more than their own problems. So if we can come to a miner and say, hey, I'm going to increase your bottom line revenue by 5 to 9%, that sort of light switch goes on. Follow up with us. It's a really exciting industry. A lot of these conversations weren't happening a year or two ago. And hopefully next year we'll be in a different place where we all recognize Bitcoin as a powerful energy transition technology.
That's fantastic, guys. Well, thank you very much to all of you in the audience here, Robin and the team at Bitcoin Energy Summit. Thank you for having us. And everybody, let's keep pushing this industry forward. Thank you.